Welcome to QAV America, Tony, episode 32. What do you know, TK?
Well, it's reached the shores of America and America's news outlets, but it's been an unfortunate, or worse, an unfortunate time in Australia. So, a lot of reflection going on in Australia over the terrible things at Bondi Beach. If I had lived in Sydney, where I was living, we would have been pretty close to it.
Yeah, very shocking. I think it's maybe the third mass shooting we've had in nearly 30 years. Does that sound about right?
Yeah, I can only think of Port Arthur and this one being that bad. There's been a couple of, sort of murder suicide things, farms or whatever along the way, but this is the first
Yeah.
with weapons that shouldn't have been licensed. I don't think in the first place to people.
In public,
Mm.
you know, civilians, all of that kind of stuff. The first one like that since 1996, I think, that we've had, nearly 30 years. So yes, very shocking, very sad, very tragic, very complicated, very complex. But you know, it's something that we're used to reading about on the front cover of the New York Times, but not
Yeah.
about Australia. So anyway, moving right along. Um, let's talk about stock market news in the United States over the last week, Tony, and then I will do a deep dive on Ziff Davis. ZD is the ticker.
Would that be
And as I
ZD?
ZD, yeah, ZD, right. And as I mentioned, there's an Isaac Asimov link to this, which you will enjoy
Oh,
because
well.
we're both big fans of Asimov. Well, the market's been a little bit wobbly in the US again. Finished the week with modest losses. S&P 500, the Dow and the Nasdaq are all trending lower. Traders over there are waiting for key economic reports on job and inflation. Um, Stocks saw pressure as investors are moving into value area, Tony. Value.
Oh, we can see we got someone to sell to.
Yeah, although quite often what we've seen over the years is when they talk about value, it's not the same way that we talk about
No,
value.
it's not.
Our definition of value is a little bit more specific, I think.
Yeah, they
The
often the
AI,
indices normally talk about value as being the lowest deciles of the PE ratio range, but as we know,
yeah,
PE ratios aren't a great guide to the value of a company.
yeah,
Always.
yeah, we're looking at their ability to perform as businesses and getting them at a discount. What else? AI and tech sectors sort of jittery as a result of some of this stuff. Some AI linked names like Broadcom have had some big declines. It had its worst 3-day drop since 2020 as some of the AI investment narratives facing some scrutiny. Basic materials and financials have outperformed. In our Australian show, we were just talking a lot about copper, and you did a deep dive on one of the Australian copper miners, Ferrous Resources. Obviously, there's gold is still doing well from a commodities perspective. Crude oil and LNG are not doing well, and we aren't really sure why, but movements around Russia, Ukraine, and Venezuela might have something to do with it. And we also were talking about the fact that all of the urgency around building data centers and the energy requirements for data centers playing a big role in driving copper prices up. Um, what else have I got? That's basically it for the US. I think general overall market news, it's a bit jittery over there at the moment, but our portfolio has had a good 30 days relative to the S&P 500. It's up 3.2% in the last 30 days, our portfolio in the US, that is, versus 1.22% for the S&P 500. But year to date, we haven't had a good year still. I think we're down about 10, 11% versus the S&P up 14%. But all time, if I go back since the beginning of our portfolio in the US, September 2023, we're up 64% versus the S&P 500 up 53% over that period of time. So we're doing okay over that 2+ years. Big performers in our portfolio are, see, I'll stack rank them by game. Still, Willis Lease Finance Company up 186%. Innova International up 169%. Euroseas up 99%. BLX, the Foreign Trade Bank of Latin America, is up 84%. RM, Regional Management, is up 70%. UBS is up 38%. Gas, Stealth Gas, is up 38%. Sarcos Energy Navigation, TEN is their ticker. They're up 32%. KT is up 23%, your initials in reverse. Jackson Financial is up 17. Renaissance Holdings is up 4. And our most recent acquisition, Korea Electric Power, is up 1.5% since we added it a few weeks ago. And then I like to talk about the companies that we've talked about but haven't actually bought because our portfolio is full. It's been some great performance from these companies. Obviously, the top one, Ziff, the Chinese watch company, is up 850% since we talked about them in July. Chemex is up 106% since we covered them back in March. A lot of around 40%. Canadian Imperial Bank's up 46. Oryx Corporation is up 40. Precision Drilling is up 43. IHS is up 37. Sasol is up 26. Ford is up 26. People told me on Reddit that Ford was a dud.
Yeah.
Shouldn't even be looking at Ford. It's up 26% since May. American Airlines is up 11% since we talked about them. Topgolf is up 9%. AirCap, that we talked about the end of November, is up 8% since then. So all in all, we've talked about 29 companies on the show since March. 22 of them are up, 7 are not. The win ratio of 76% so far with those, so they're doing okay. The system is working as we would expect it to in the US, Tony. So today I am going to talk about a little company called Ziff Davis, as I said. And, you'd be familiar with Ziff Davis, I'm sure. I know you're not necessarily a big tech head, but you've heard of Ziff Davis, I'm sure. ZD.
You'd lose that bet. I hadn't heard of them until I started researching them today.
Really? Oh, okay. Well, you haven't been in the tech industry like I have for the last 30 odd years.
No,
if
I was in there once, but not for a long time.
Yeah. So if you're trying to Google the best tech product, best VPN, because you care about your privacy, you're probably going to end up on a Ziff Davis website. Which camera should I buy? Ziff Davis. Which phone? Which antivirus package? If you're ending up on a website, you're probably ending up on one of the many, many properties owned by Ziff Davis.
I just asked you, Ken.
Yeah, I mean, I am your Ziff Davis. Yeah. What should I get? And then I'll ask Ziff Davis, and then I'll come back to you and tell them.
So
they make about $500 million.
That means you're surplus to the chain now. I can just speed things up.
Yeah.
Thanks
so
for
then
that.
That would require you going online and looking something up. So, how old are you now?
That's half.
60 what?
62.
Yeah. So people who are over 60 don't know how to internet. Us young kids, 55. You missed the cut. They make about $500 million a year by basically being the people that tell you what to buy, particularly with tech stuff. It's not all tech, but particularly tech. But they've got an interesting story and an interesting, maybe somewhat challenging future. AI may kill off businesses like this. And I think that's one of the reasons why the share price for ZD is where it is at the moment. And it's funny, if you look at where their share price has gone since the AI came around, it has not been a great story. They were up around about $130 at the end of 2021. They're now trading about $36. So it's been a rough few years.
Do you reckon that's AI related, Cam?
I think some of it is, yeah.
Because
I
some
think,
of it maybe, but don't forget they're also publishing a lot of magazines and online magazines and businesses associated with those, and they would have been at their peak during COVID, I would have thought, and now their share price has come off since then.
yeah, there's probably some of that. You're right. And, there's a lot of competition for online advertising, and a lot of money's moving away from banner ads and that kind of stuff into influencer marketing and that kind of stuff. So there's always constant competition for ad dollars. And these guys were one of the first companies to figure out SEO advertising driven. Well, they borrowed it from the porn industry. The porn industry invented online advertising, of course. But these guys went broke and then figured it out pretty quickly. They basically own the internet's comparison shopping infrastructure. Brands like CNET, Mashable, IGN, which is mostly gaming related stuff. If you're looking for a game review or a walkthrough for a game like No Man's Sky or something, whatever the latest game is, you'll end up on IGN. Speed
That's why I
Test,
haven't heard of them.
yeah.
Yeah. What's
Speed. I don't think
is
they
a
publish
game
any
like
golf
is a game like a
magazines, Tony.
jigsaw?
Yeah, something like that. Jigsaws and golf. If they had
Yeah.
magazines about jigsaws and golf, you'd know all about.
And crosswords.
Speed test. Have you ever used speed test to check your internet
I
speed?
have, because occasionally when we try and do this podcast, you go, check your internet speed.
It's been a while. Ever since you got
Starlink.
Elon's
Yeah.
satellite dish, yeah, that's gone away. They own all these guys. They own all of these brands. And when you click a buy now link on one of their websites, they get a cut. They also get advertising revenue straight into your eyeballs. But the way that they've built their business is a lot of it is kind of evergreen. You write once, you do a review of all of the different routers or all of the different microphones for podcasting or whatever it is, and it's good for, it's not like news, which goes out of date quickly. This stuff is good until the next iteration of those things come out. So it's good for 6 months, 12 months. And they monetize the crap out of this stuff. Operating cash flow is about 374 million against a market cap of 1.4 billion, so like a 3.8 times multiple. It's generating a lot of cash. But the founding story is interesting. So it goes back to 1927 in
Is
Chicago.
that before the internet came?
Um, well, some people would say that, Tony, although I would argue that pigeons were the original internet. So the pigeon net is what we called
Right.
it back in the day. Yeah. They were publishing hobbyist magazines for amateur radio tinkerers, is where they started. And then in the PC era, they had PC Magazine, Computer Shopper, Popular Photography, lots of titles like that. But then they nearly died in the early 2000s after the dot-com crash. They were drowning in debt. They bought a lot of stuff in the late 90s. Ad revenue disappeared when Steve Ballmer decided to crash the internet, allegedly. It's a story that I believe. Assets were sold off for scraps, but the brand survived and it was reinvented around being a purely online play. But the founding guys, William Bernard Ziff Sr. and Bernard George Davis, started it in 1927. Davis died in the early Ziff Senior died in the early 50s, I think, and then his son took over his share of the business, and Davis sold his share to Ziff's son in 1957. Davis then went on to buy Alfred Hitchcock's Mystery Magazine in 1975 and Analog Science Fiction and Fact in 1980, and in 1977 he launched Asimov's Science Fiction. And I read a bit about that because it has nothing to do with this story, but I wanted to know about it. So Asimov went into the company to pitch a story that he had written for their analog science fiction magazine, I think. And they floated this idea of launching a science fiction magazine with his name attached to it. And he didn't want to do it because there was a couple of science fiction magazines and he was friendly with the owners of them and he didn't want to damage their business. But Davis and the owners of the other magazines convinced him that his brand on a science fiction magazine would be good for the whole industry. It would be a rising tide carries all ships kind of thing. So he agreed to do it as long as he didn't have to do anything. I don't want to have anything to do with it except I'll write an article or an editorial or something like that once a month or whatever it was. So, yeah. And that's how it came to be.
Wasn't that our conversation starting up QAV?
Pretty much. Yeah. I don't want anything to do with it. Just use my name. Getting back to Ziff Senior, major Zionist who got himself into trouble with the British government. In 1938, he wrote a book called The Rape of Palestine, where he was criticising British policy in Palestine when it was a protectorate of the British after World War One. The British Foreign Office declared the book violent and offensive and put him on a watch list. So, interesting character. But anyway, it was his son, Ziff Jr., Bill Ziff Jr., who redirected the company towards enthusiast magazines and trade publications. He bought Car and Driver, Popular Electronics, PC Magazine, World Aviation Directory, and Computer Shopper. But then, as I said, it kind of crashed in the early 2000s after the dot-com crash. They had to reinvent the business over the next 10 years, and some private equity owners came in, rebuilt it around online-only, SEO-driven digital content, evergreen revenues, affiliate commerce. They realized that people don't trust ads, but they do trust best-of lists, even though those best-of lists are just a big ad. But if you call it a best of list, people will believe it if they think it's a genuine independent review and they don't realize that it's just how much money's changed hands behind the scenes that determines who's at the top of the list.
Isn't the internet just a series of lists? Like the successful businesses, real estate, car selling, they're just lists. Lists you used to buy in newspapers,
lists of lists
put on the internet.
And Google was just a list of lists telling where all the lists were.
Yeah.
I remember back in the days when the lists were all manually compiled too, and you had to submit your website to Yahoo and then they would add you to the list of blogs about Seinfeld or whatever it was. But these guys have become really good scavengers as well. Give you an example of this. In 2008, CBS bought CNET for $1.8 billion. In 2020, they sold it to Red Ventures for $500 million. And then Ziff Davis picked it up a few years later for $100 million. So that's kind of been their playbook, is buying faded digital empires for pennies, then they strip out the costs, plug them into the monetization engine and just harvest the cash that's left. They don't chase Pulitzers, they chase Google rankings and purchase intent, basically. Very, very focused, and they've done reasonably well out of it. But I think there's a big chance AI is going to kill this business. Today, people don't trust AI to tell them what to buy. I do, but most people don't. I will ask AI, I'll ask GPT for its opinion on something, and then I'll run it through Gemini and Grok and Claude and say, fact check this for me and tell me what you think. But I think most people aren't doing that yet. They may ask AI for some tips, but then they'll end up on a Ziff Davis website to read reviews, and that's still the purchasing mechanism for them is going to these review sites. Most people still run a trust loop. It goes from AI to a review site.
Yep.
That may change in the future if AI becomes trusted enough and then becomes the purchasing agent. And obviously the AI companies are trying to figure out how to make money. There's been talk recently that they're all planning on putting advertising into the AI platform. And as Cory Doctorow refers to it, the enshittification of AI will happen. But that may or may not happen. And even if it does, there may be an opportunity for companies like Ziff Davis to get licensing revenue, because at the end of the day, the AI is going to refer to these human written reviews and say, well, based on the internet that I gobbled up, here were the best rated products. It's not testing the latest mobile phones or the latest microphones itself. It's got to rely on human content at some level to do that.
There is actually a court case going on between this company and one of the AIs about that very fact.
Yeah, as there are with lots of media companies and publishing companies, etc., and they're probably not going to win. The publishers aren't going to win these court cases, but they may be able to negotiate some sort of a licensing revenue deal so they cut their losses, so they don't lose everything, but they get something out of it. Bit like the media companies in Australia have done with Google over the last however many years, and Facebook. You can link to our stories if you pay us money. And then they got the government to enforce that, which, again, corporate socialism, get the government to force you to pay me money. But this is, how this plays out is forecasting, and we don't forecast. I got into arguments with people on Reddit about the Vale show that we did last week. People were forecasting the future of iron ore and China and all of this, and that's going to fail and this isn't going to work. And I'm like, yeah, well, I don't forecast. I look at the numbers today and the valuation today and ask myself, can I buy it based on its amount of money it's generating today? Can I get it at a discount? I'm not looking for growth. I'm looking for value. And if the thing changes a year from now or 6 months from now, I'll sell it or change my position on it.
Yeah, correct. And of course, the forecast that the people who argue with you are using are baked into the share price already. But at some point, it hits our list as being cheap enough that things have gone too far one way, and then we wait for the pendulum to swing back to what it should be valued at, taking all the forecasts and the actual things that have happened into account.
And as we see quite often too, in some cases, it's not because those businesses that we've invested in have a magical recovery. It's because somebody else comes along and goes, you know what, this is cheap, I'm going to buy it. And then a bidding war starts and the price goes up, and they're all trying to figure out what's the fair value of these assets. And because we've bought it at less than the fair value for the assets, the share price goes up and it gets sold, and we do well out of it. So we're not always necessarily planning on a miraculous recovery of a sector. It's sometimes we're just buying something until it gets dealt with.
I think in Vale's case, we said, hey, the iron ore price is going down. So we tracked the iron ore price as well. So we wouldn't necessarily be buying Vale at the moment.
No, until the iron ore price turns around, if it turns around.
Yeah.
But I did go through some of the potential scenarios for a company like this. Then there's a few things that you can imagine might happening. Let's say the AI sector does break these businesses to a large extent, which I think will probably happen. That would be my guess, is people will end up in the next few years trusting their AI to make decisions for them, and even if it is using content it's gobbled up from Ziff Davis, I'm not going to the Ziff Davis website. I'm not clicking on their link. I'm not clicking on their thing. I'm going straight to Amazon or straight to Walmart or whatever the Australian equivalent of that is, Amazon, to buy the thing that I want.
If Ziff Davis goes away and I want to buy a new phone, how does AI tell me that this one's easy to carry in my pocket or is too heavy for a long day on my feet carrying this around or whatever? It still needs Ziff Davis, doesn't it?
Reads Amazon reviews, is be my guess.
Okay.
Yeah. Reads customer review sites. You were talking about wisdom of crowds on the last show and Polymarket. There are, and there will always be review sites, and they get gamed as well, but they're probably more trustworthy than a Ziff Davis best of list, because there are perhaps commercial interests gaming review sites to some degree. We all understand that, but to what degree is debatable. I can be pretty sure that money is changing hands behind the scenes at some level of a publishing company and the vendors of products to make sure that their products are reviewed well. It's payola from the radio industry 30, 40 years ago, right? That's the way
I
capitalism
don't know
works.
about Ziff Davis, but I know when there's a product review on the AFR, there's generally an ad that goes with it.
Yeah,
Yeah.
yeah. AFR for Americans is the Australian Financial Review, our version of the Wall Street Journal. So anyway, a couple of the ways this could possibly play out, and again, this is prognostication, which doesn't factor into my investing thesis, but it's just we're talking about it, so we might as well drill down into some of these. There's sort of the sum of the parts breakup, the chop shop model. It's the most immediate safety net, I guess. Ziff Davis is really just a holding company. So if the media side, IGN, Mashable, PC Mag, goes to zero, they still own massive profitable software and subscription assets that have nothing to do with Google search. They've got Ookla, which is speedtest.net. Telcos pay millions for this data to prove that their networks are fast. So it's sort of a alternate revenue stream that they have. AI is probably not going to kill that off. They could spin it off or sell it to a huge infrastructure giant like a Cisco or some sort of telecom tower, REIT. It's probably worth 500 million to a billion, given its dominance. It's that and fast.com, which I think Netflix owns, are the two main ones for speed tests. And then there's also something called Humble Bundle. It's a game store and charity bundler, has direct email list of millions of gamers. It bypasses search entirely, so they could potentially flip that to a gaming giant like Steam or Epic Games or one of these guys as a revenue source. So they have diversified outside of advertising. They've got a couple of interesting assets. The other one could be the take private equity buyout, which they've already done. The current CEO, Vivek Shah, has already did that a few years ago. He took it over with a private equity firm the last time they had financial trouble. It's basically run like a private equity firm already. If the stock price crashes because of AI panic, the cash flow could still be attractive to PE firms who don't really care about public narratives. They just want to get access to the 260 odd million in free cash flow that it has. Even if AI takes a lot of it, takes a lot of the advertising revenue, it's still going to have revenue coming in from some of these other assets that I mentioned. The current CEO's already taken it private once before, could perhaps do it again, or somebody else could come in and do it again. Then there's sort of the data rentier pivot, the News Corp model. Instead of fighting AI, they become a landlord for it. So they basically say, we will do a licensing deal with AI to keep providing human written reviews and access to the archives. As you said, they're suing them at the moment, but there could end up as some sort of a settlement or a licensing deal issued by the courts where it gets paid, I don't know, $50, $100 million a year from OpenAI to keep the doors open and legally train on their content. And then there's the desperation merger option, the consolidation. If the industry really does start to collapse, there will be mid-tier players that will try and merge to cut costs and do a sort of a big mega roll up. There's a company called IAC, Meredith, that owns the other half of the internet's how-to content, Better Homes and Gardens, Investopedia, The Spruce. The two of them could do some sort of merger, combine back offices, fire half the staff, merge sales teams, create a single giant fortress of content that's too big to ignore for advertisers, and could do a licensing deal with the AI platform. So there's a lot of different probabilities, even if the AI thing comes to pass in terms of killing its business model, that could rescue it. But it's probably not going to 10x. It's not gonna be an Nvidia. That's not what we're looking for. We're looking for businesses that are generating cash that we can buy at a discount and that have some sort of a moat, which these guys do for at least one more harvest cycle, I think.
I mean, I couldn't forecast what will happen in the space. I don't know if anyone can really. All of those scenarios you spoke about are all possible, as
Yeah,
is one where they keep trundling along like they are for a long time too.
yeah. And maybe the world runs out of copper. We have no more data centers. AI falls in a heap. Who knows? Just quickly, I'll take us through the numbers, Tony. So average daily trade is about 22 million. So it's big enough for most investors. Big one for us is, of course, price to operating cash flow, which is 3.8 times for these guys. So it's quite cheap for us. Stockopedia quality rank is 98. So we give it a score for that. Its stock rank is very high too. Let me just find that. Stock rank is 97. So we score anything over 90. Its F score, Petrovsky F score, looking at its financial trend, is a 9 out of 9. I think that's only the second time we've seen that since we've been doing this show. Do you remember who the other one was?
No.
Me either. But 9 out of 9 is pretty good. The price is above our first IV inherent intrinsic value. I say internet value, intrinsic value, but it's below our second. And let me tell you what the intrinsic values are. IV1 is $16.05. It's currently trading at 36. But IV2, which is looking at the future EPS, is $68. So there's quite a lot of upside between the current price and our IV number 2. What else have I got? Price is less than book. Price is less than book plus 30, of course, as well. It doesn't have a new 3-point upturn. Actually, it does have a new 3-point upturn. Yeah, why did my table said it didn't? It does have a new 0.3. It's very close to its sell line, but it's just gone above its buy line as well. So I don't know. So I should get an extra point for that as well. Yield, the P is not less than the yield. They don't pay a dividend because they've been doing massive share buybacks, which is something else we like to see. That's where all their money is going. We don't score a US checklist for buybacks yet, but we should. And if we did, and I will get around to that, they'd get another point for that as well.
That's the interesting thing too, is that with all the cash they're throwing off, they've been buying back shares, buying back a lot of shares in the last 5 years, but they're also, I mean, their business model is about acquiring new things, acquiring companies, as you said before, media assets that are on there, being paid, they're paying pennies in a dollar for. So they've got cash to do that as well as buy back the stock. So that shows you how much cash is being thrown off by this business.
Yeah. Don't know what they're going to be buying in the future, but we'll see.
Oh, ChatGPT. When Gemini dominates, who knows?
Yeah.
For pennies in the dollar.
Well, there are plenty of stories going around that GPT is going to need, OpenAI is going to need a US government bailout because they're just, yeah. Well, that was just because Gemini came out with a new model, but look, Google is really crushing it by all accounts from what I can read between the lines.
I've got to say, not to labour a point here, but it was 6 months ago that people were saying, "Oh, Google's dead." AI is going to take over from Google. No, Google are smart enough to adapt.
Well, it gets back to the old Clayton Christensen thing, right? Of the innovator's dilemma.
Yep.
Are you willing, and is your culture able to kill off your existing revenue base in order to protect yourself and get on the new thing? The ironic thing with Google, of course, is the whole large language model approach to AI came out of Google's labs, but then they didn't do anything with it commercially. They didn't launch it, as I assume, because they were scared of what it would mean for their search revenue. Then OpenAI poached Ilya Sutskever out of Google, launched ChatGPT, and then Google was like, "Oh shit, okay, game on." And yeah, now they're just crushing it. They're doing
And
such a great
and of
job.
course, every time you do use Gemini, you get an ad. So they've monetized it as well.
I don't get ads when I use Gemini. Where do you get ads when you use Gemini?
Oh, I just use Gemini. I just type into the search bar, tell me about blah blah blah, and it comes
You
up.
don't go to Gemini. You just
No,
go to Google.
yeah, but it
Yeah,
says
right,
here's the answer using Google Gemini.
right.
Hmm.
Yeah, but their search revenue is, going to take a hit. But whether or not they can replace it with other forms of revenue, and you got to hand it to Google. Like, obviously, they've done a pretty good job over the last 30 years of staying on the top of their game. So we will see. Anyway, what else have I got for you? That's it. Like a QAV score, quality score is 77%, and they should be a little bit higher. But the QAV score was 0.20 when I did my buy list yesterday, my US buy list. So I like it. I like it. I can't add it to the portfolio right this week because we've got nothing. We've got no money. We're fully invested. But I kind of like this business.
Yeah, I had a look at their results, their last quarter three announcement, and a couple of good things to report from that were that they started to show some organic growth. So this, I think, one of the reasons why the business went down in stock price in the last 5 years is that a lot of it's been based on their M&A activity. So they're running to stand still. They're buying things. They're using capital to buy things, and that's replacing things that they're closing down. But this has been they reported in their latest quarterly that the uh, recorded goodwill impairment charges, which were 17.58 million for the quarter, and this has ended September 30, compared with $85 million in the prior year. So, and goodwill impairment is basically writing down what they've acquired in the past because it's not worth what they paid for it or what they put it on their books as. So that's a good thing. And it says that they're getting more organic growth out of what they've acquired. And so I think there was a bit of a tick up in the share price, probably why it became a buy on our system. Some of the analysts like that, and it's got to be a risk for this company going forward that they just run out of things to buy. And if they don't get organic growth, then it's a bit like a lot of roll-ups that we see in Australia, where someone goes around buying up smash repairers, and
Mm-hmm.
eventually they run out of smash repairers to buy, but they've got to be good at running smash repairers or the ones that they bought at the right price. Otherwise, their share price just goes down. So
Yeah.
roll-ups are always tricky. This is a roll-up by any
Yeah.
other definition. But this is the first quarter where you've seen a lowering of the goodwill impairments for a while, which is a sign that they are actually getting some organic growth out of what they bought, which is good.
Hmm. Well, that's Ziff Davis. Do your own research, but I think it's sort of a classic Berkshire textile mill sort of a company. You know,
In the
maybe a
internet
business on
age,
its last legs. Yeah, it may be a business on its last legs, but it might have another 5 years, 10 years of generating cash, and who knows what could happen to it over that period of time.
yeah, look, it could be on its last legs. I don't know if I necessarily subscribe to that. Certain parts of the business could be on its last legs, like the comparison site nature of it, if that how it plays out. And I don't know that it will play out that way. But there are underlying assets which will survive, as you say, like the speed test side of things and other direct to
Mailing
business
lists and
assets that they
yeah,
have, which are likely
yeah.
to survive. Uh, I saw a good list of the risks and challenges when I was doing my search for this. So they think the analyst who made this list said that about 35% of their revenue could be affected by search engine changes, which I guess is a result of AI. So that's a large slab of the business, but certainly not all of it. And I
Mm.
think also bundled up in that wasn't just AI, it was the fact that SEO changes, that the rules change as to what gets promoted in SEO, and that sort of search algorithm volatility can impact the rankings and affect this company as well.
Hmm.
Market saturation in key segments was another one. Economic pressures affecting consumer spending. If you don't have enough money to buy a phone, then what's the point of going to a site that recommends which is the best phone to buy? So there are plenty of risks and challenges for this company, notwithstanding that AI might impact it. But they're pretty diversified. Um, two, they're at pains to say there are two big slabs to the business. One is the web advertising business, but one is also the subscription business, which is a large part of their revenue as well. So I also think if they've had a near-death experience in the past, or a couple of them, that they might be prepping for different options now in case it happens again. So they could be positioning themselves already for what they see as coming down the track, and might not mean the share price doesn't tank, but it may mean that they live on for longer than current predictions may suggest.
Mm. Meanwhile, generating a lot of cash,
Correct. That's what we like.
which gives them options.
Yeah.
All right, well, check it out. ZD. This episode was brought to you by the letters Z and D. Tony Ziff Davis. Have a good week, TK.
Thank you. Happy holidays to all the people overseas. I'm going to take a week off next week, so you'll be either not doing it yourself or doing it yourself without me.
Yeah, we'll see.
Okay.
Bye.
Thanks, Cam.